Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of BTC, taking a look at what's been going on with Bitcoin. We're going to be taking a look at some on-chain data, we're going to be taking a look at the daily charts and trying to form an opinion as to where we think things are likely to go based on this data. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe and tap the bell, select all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, you're missing a trick. Check it out, linked in the description down below. It is a fantastic community talking crypto 24/7. It's completely free, and it is the first place that we go to notify you of everything that is going on in the crypto space. So why not keep an eye and keep a finger on the pulse of crypto by joining us down in the Discord server. Let's jump right down into this one, right? So we are going to take a look at some Elliott wave theory, we're going to take a look at some smart money concepts, and we'll take a look at some key areas as well. But what we'll do is we'll start things off by effectively actually jumping into our on-chain data. It's been a little while, and this is because I've got some problems with a 𝗕𝗘𝗪𝗔𝗥𝗘 API. I need to fix it. I just haven't had the time to do that just yet. It doesn't affect the wallet counts or anything like that. It's literally just a price feed issue. So it's a price of Bitcoin coming in and marrying up with everything else. I've manually pulled the data this morning so we can take a look at it, but until I fix it, it's going to be very laborious for me to try to go around and fixing all the APIs and all that kind of stuff. But nonetheless, I've got it all sorted this morning so that we can take a look at this. And if you want a little bit more on this more frequently until I get that issue fixed, do join us down in Discord. I'll try to keep everyone up to date down there. Okay, let's just start things off, right? Top right-hand corner. We have the inflows of Bitcoin going onto the exchanges since the 1st of January 2023. We have the Bitcoin coming off the exchanges since the 1st of January 2023, and then we have the difference that is left on the exchanges after all inflows and outflows are taken into consideration, and that is 10,000 Bitcoin on the exchanges. So 2.7843 million goes on, 2.7740 million goes off, leaving 10.27 thousand on the exchange. You can see here that it's actually now is just below that midline ever so slightly, as we were ramping up quite a significant amount of Bitcoin onto the exchanges. It's coming off a little bit now, and I think it's important that we reflect on where it's all going and all that kind of stuff. We can see here that some Bitcoin has been flowing off the exchanges since it peaked up here on the 21st of March. It started to come down a little bit, and you can see that on the 30-day average bars that it's slowly now just below that midline, which essentially just means that slightly more Bitcoin is leaving the exchanges than is going on day by day, well actually on the 30-day average to be more specific. We won't talk about the HODL waves. I haven't updated that data because that requires quite a few additional manual processes. But let's go ahead and jump into the inflows and the outflows as a line graph. The inflows and the outflows as a line graph actually shows everything kind of marrying up quite nicely. We have 2.7843 million obviously going on and 2.7740 million coming off. Now, what I do want to kind of reflect on is the differences here between the current state of play for inflows and outflows and the 2019 state of play for inflows and outflows. And if I come over to here, come over to my filters 1 second. You can't see this, guys, but I'm just going to adjust the filters and to equate for the same date range. Okay, so it is currently the 2nd, but I only have, so it's the 3rd today, so I have data up until the 2nd. I'm going to apply that, and then I'm going to remove it. So here you can see the differences in volume. You can see the significant surge to the upside in April 2019, right? And one of the things, I'm not too concerned about the line graph because everything is marrying up quite nicely. I just want to kind of draw people's attention to the volume of Bitcoin that's actually going through here, right? It's 4.3473 million going onto the exchanges and 4.323 million coming off the exchanges. Okay, now in relation to where we are right now, we're at 2.78 million, right? 2.78 million or 2.77 million versus that of 4.3 million. Okay, we know that the volumes are significantly lower from where they are now versus the start of the previous bull market, which was 2019. So Are we in a bullish market with half the volume, or are we actually just in some kind of manipulated state of play where things are about to get significantly worse? I'll leave that for you guys to decide. But you know, the data doesn't lie here. It just shows that the volumes are very, very little in comparison. It's like 50% of where things were at the start of the previous bullish market. So are we in a bull market? Are we not in a bull market? I'll leave that for you. But let's jump into the actual wallet counts, right? We'll start with the retail side, and the most vulnerable retail investors, which I've labeled up as Bitcoin dust, and these are wallets that have over 0.01 BTC in them, right? And we can see that things did surge up from this low side of late February. So 23rd of February, we kind of bottomed out with 11,471,000 wallets, and right now up here on the 2nd of April, we're 11,740,000 wallets, right? So we know that there's been a significant amount of accumulation occurring from Bitcoin dust, which is basically a wallet that has 0.01 Bitcoin in it. Now, the concern here is that these are the most vulnerable retail investors have been FOMOing in, and this might be money that these guys just simply can't really afford to lose. Hopefully that isn't the case, and hopefully they hold long term and they're not going to get shaken out of the space or anything like that. But my concern here is that when times get tougher, which I do think they're going to be, we're going to see, unfortunately, a lot of selling pressure from some of the most vulnerable retail investors out there, Bitcoin dust being one of them. As we move over to the other retail wallets, what do you see? You just see crazy FOMO. These guys are, you know, testament to those guys for just not really understanding where we are in the economy. But these guys are just buying, right? And this is I guess, like a whale's wet dream to a degree, because this is exactly what they want. They want the liquidity that is being generated from these retail investors. And we can see here very significant climbs to the upside on the wallet counts of Krill, right? Krill is 0.1 Bitcoin per wallet minimum, and we can see that these guys have significantly climbed up since January, right? 18th of January, there were 4.2 million, and up here there is 4.295 million. So we can know that we've almost gained 100,000 wallets with at least 0.1 BTC in them. We can see the shrimps have also climbed up quite massively right now, just rocking short of 1 million wallets at 992,271 wallets. This is very significant to see such a huge climb to the upside here for our retail wallets with over 1 Bitcoin in them. But again, it's the same concept, right? They are effectively buying premium Bitcoin here, and it's all about the fear that they're missing out, and they don't fully understand how markets work, right? Markets do not just go up, they do have to have corrective sides to them, and unfortunately I think we're about to find one, and it's going to lead us into a bit of despair for many retail investors who may start to panic sell as a result of that. And we can also see dolphins have been very much accumulating as well, and this is 10 Bitcoin or more per wallet, and you can see that these guys are accumulating and still pushing their wallet count data upwards. Now, one thing I'm going to say here is that, and I said it before, right? Everything when it comes to buying and selling is all about liquidity, right? And if a lot of people are basically looking to buy, well, someone's got to be selling to them, right? It's very important that we understand that in order for liquidity to exist, you have to have buyers and sellers, right? People are willing to sell Bitcoin and people are willing to buy Bitcoin. And all we've looked at so far today is a load of retail investors buying. So who's selling, right? This is very important because there's always the other side of the coin. And well, if it's not retail that's selling to retail, then who is it that is selling their Bitcoin to the retail investors? And well, it's been no surprise that, of course, it is the larger institutional level investors. And we can see that the sharks at over 100 Bitcoin per wallet have been aggressively coming out. They've been essentially taking the liquidity that is provided by the retail investors and coming out of their positions. Now, for those who do not know, the Shark wallet is what I would call a trading wallet. It's basically professional traders, 100 Bitcoin or more, and they basically follow price action. That's not necessarily to say that they set the trend of the direction. Sometimes they do, and I can show you a few examples of this. But essentially, for the most part, really what they are doing is following that price action and looking at the data and trading predicting the price of Bitcoin. Sometimes they get it wrong, sometimes they get it right. Recently, they've been absolutely killing it. We saw the shark wallets here spike up in December massively, ahead of the pump to the upside for Bitcoin. And, you know, these guys look at this stuff all the time. And when we're seeing them coming out like this, knowing that retail investors are coming in and basically they're retail investors are buying the Bitcoin from the sharks, we have to consider, are the sharks right or are the sharks wrong? Are these traders making the right call or are these traders making a bad call, right? And this is an important thing to understand. They're either selling at the wrong moment here or they are selling at the perfect moment. Now, we can also acknowledge that I'll get rid of that. Our whale wallets are also aggressively coming down. They did spike up a little bit, and again, they're still moving down. There's nothing impressive to be had here. The Kraken size wallet, though, is moving quite nicely back to 120. Again, this is going to be interesting to kind of see how things play out next. Okay, so one of the things that we need to consider here is what are the strategic plays from these institutional level investors, right? We know the traders are just trading, and so they're coming out. They know something that we do not. Maybe they spot something that we do not, and maybe they have just made a catastrophic mistake, right? Not to say that any trader is perfect. They're not. Traders learn to take the loss occasionally. It's possible that these guys are making a mistake. I don't think that's necessarily the case, though, because I do think, looking at the price action, we need to see a move to the downside. And I think these guys have known this for quite some time and are aggressively using the liquidity that is available from retail investors to exit their Bitcoin positions. The whales on the other side are still not really being able to participate until the retail investors are selling. They're able to buy up a little bit from time to time, but nothing too major. And the Kraken size wallet is all about manipulating the price action of BTC anyway. So let's jump into this, right? So where do we sit? Well, our Kraken size wallet so far has done the accumulating this year, or through the bear market, I should say. Nothing overly too impressive at this point. It did spike up at 123. We're currently at 120. Wallets here that have over 10,000 Bitcoin. We are looking for these guys to flood the market at some point. Don't know when, can't time it. It's going to be interesting to see what happens with these guys. Our whales are still aggressively coming out. They have no significant surge to the upside yet. So basically what's going on is they sold the bottom in November. They sold the bottom in June. It's up to you as to whether you believe that there's continued selling pressure from our whales, institutional level investors, these whale investors, these billionaires, these multimillionaires. It's whether or not you choose to believe that these guys made a mistake by selling the bottom or selling into this pump to the upside, or whether or not these guys know exactly what they're doing and they are going to drag that price of Bitcoin down even further. Okay, I'll leave that with you. I personally think new lower lows have to occur here because they were selling at the November lows. If they were selling at the November lows, then the very people who manipulate the price of action of BTC made a mistake. And I don't think retail is in the habit of making things or getting things right. So I think new lower lows, unfortunately, probably an inevitability in order for these guys to come into the space. Otherwise, they were selling at the bottom, and I don't think that's likely to occur. Our shrimp side, obviously, they're just accumulating, and we're waiting for those guys to shake out of the space. Just to kind of put this into context, guys, this is what the Kraken did in 2018's bear market. You can see that they accumulated during the bear market. They climbed up to 126 wallets and then flooded the system with excess Bitcoin. The whales did nothing until they got to a point where the retail were selling. Retail were selling right inside this little flat period here. I think this is a wrong date range. It goes from 2017 all the way through to May of 2019. Anyway, this flat period right in here is kind of what we were looking for. And we can't see it there. You can also see that these guys were selling. Oh, that's sharks, that's why. Shrimp's the one I want. This one right here. You can see that the retail investors were coming down. The shark side of things, which is trading price action, you can kind of see here that they're using, and as I say, they don't always get it right. You can see here that they were selling into this one, yet it still went up higher, right? So just understand that sometimes the sharks get it wrong. But what the main fundamentals that we're kind of looking at here is that there's always a buyer, there's always a seller. Retail investors historically sell their Bitcoin to the whale investors. As the bottom kind of comes on in, they sell into the bottom, and obviously the whale investors are buying into the bottom here. The Kraken basically essentially creates the bottom, and you can kind of see all these pieces kind of falling together quite nicely. So where we are right now essentially is in a state of trying to see whether or not we can pull this down into a nice corrective play, get some fear in for retail investors to sell their Bitcoin as the bottom is actually created, and then we'll see retail or institutional investors coming in, and then we'll see the actual bottom. In my opinion, that's kind of what I think is likely to occur. But that's just my thoughts and opinions on it. Let me know what yours are down in the comments below. Let's jump into our data or charts for BTC. As you can kind of see, we're still in play for the Z wave. This is 11,600 to 18,478. The biggest fear, though, is that it is not going to be a WXYXZ by the end. The biggest fear is it's going to be some kind of bigger corrective play that takes us significantly lower than $10,000. Not yet confirmed, but again, that's the biggest fear from an Elliott wave theory point of view. Smart money concepts. This one shows us with multiple fair value gaps. Fair value gaps are created from an imbalance in the order books. So if I come in and zoom in on this right here, okay, we can see that these candles here with these large bodies, in fact, not all of these have been marked up by this 𝗕𝗘𝗪𝗠𝗠𝗘𝗥 indicator. But basically, an institutional buyer comes in here, hypothetically, right? Someone trying to buy up a load of Bitcoin. Inside this gapped range here, there is insufficient sellers to sell the Bitcoin to the purchaser, right? So price jumps up to where there is sufficient liquidity, where those buyers and those sellers can kind of marry up together and complete the transactions. And in this kind of process, this gap gets left behind. This gap that's left behind is called a fair value gap. It's also known as an imbalance in the order books. From a smart money concepts point of view, these gaps have a tendency to get filled back out, because if you think about this logically, someone wanted to buy Bitcoin here, okay, but they ended up paying a premium price up here. They're not going to continue to pay up premium prices. They're going to stop their buying and wait for price to kind of pull back down into these lows, and then they're going to continue their purchasing from here, right? So that's kind of why you see and expect these fair value gaps to get filled out. What you don't expect to see is shit like this. Okay, you don't expect to see these getting stacked up like this. It's because if someone was willing to pay down here at $20,686, right, they're willing to pay that price here, but they actually ended up paying about $21,800. Are they going to then go ahead and buy at $22,000 and then actually pay $23,900? Then they try to buy some more here at 25, but actually end up paying 26. It's illogical to think that these large people who want large institutional investors or these whale investors wanted to pay 20,500, but end up paying premiums of 26,500, right? That's an unlikely kind of scenario. It's illogical to kind of think of that. Now, it's possible that they are just, just to put my retail hat on, right? Try to come up with a reason as to be bullish here. Maybe it's just that they're FOMOing in. Maybe they're just missing an opportunity. They just want to buy their Bitcoin. They want to secure it, whatever, right? Those are not how these institutional level investors work. This, to me, is clear manipulation, in the fact that it's illogical for them to continue stacking up these fair value gaps in this order in order to kind of fulfill their positions. It's not normally what happens. If it's illiquid here, they're not going to kind of push up higher and try to find the liquidity. They're going to try to pull the price down to create pools of liquidity slightly lower. So to me, this looks like it's all about liquidity grabbing the price of Bitcoin on the way up here. Grabbing Bitcoin and pushing the price of Bitcoin to the upper side, creating FOMO from retail investors, and then selling the same Bitcoin to the retail investors at a premium price, grabbing the additional liquidity whilst also simultaneously flooding the ecosystem with excess Bitcoin. Because as soon as that demand dries up, where's the price of Bitcoin going to go? It's going to come down. So essentially, that's kind of where I feel with this one. I think that these gaps will all get filled out at some point, and we will see negative price action for BTC. It's just a matter of being patient and waiting for that to kind of play out. Now, from a smart money concept, sure, we're in a state of play that is technically bullish at the moment. Does not mean that we cannot move down to sub 20K. But again, like I said, I expect new lower lows personally. I can't see why those whale investors were coming out at the November lows if that was in fact the bottom for BTC. So unlikely in my opinion. I think we have to come down lower. Now we can see here that we're doing an ascending wedge, however you want to look at it. I look at this as higher highs, higher lows, which essentially has a tendency to break downwards. So, in line with everything else, but this is just on a much bigger scale here. You can see these before, high highs, higher lows, and we can see this one here on a much bigger scale. I think we've come right up into our supply range. We're finding it as supply range, and rejection from here, unfortunately, in my opinion, is highly likely. The biggest fear that I have, of course, is the bigger correction that takes us to sub 10K and all that kind of stuff. But let me know what your thoughts are down in the comments below. I'm going to leave the video right there. If you found this useful, informative, entertaining, smash that like button. If you're new to this channel, subscribe. Don't forget to join us down in Discord. And guys, I'll catch you all in the next one. We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not